Cheers to you, retail trading team, as I cannot yet cheers this, what is so far embarrassingly flat market on this lovely Thursday. This is your routine briefing, and we're going to make sure the sound works before we get started. Okay, good to go. So, we're going to jump right in, and I'm having a lovely hair day, as you can see. I did not gel my hair today, and so I look like some type of exotic bird. So bear with me there, and let's focus on the charts and not the routine trader. So we're just going to jump right into this warm-up. I'm going to switch screens. We'll pop back to this when that TPO becomes relevant. And so we're going to look at the warm-up first. So this document is available in the description of the video, just like all the other lovely resources. So you can find it there if you want to follow along. I do keep it updated every day, and I update it here to let you know when it's complete, and we're going to do that right now to confirm what's going on here. So just to review what we've kind of seen so far today. So we're getting that up overnight inventory. You had, I think it was employment numbers of some sort, kind of pushed us, cleaned up what was 100% net short, and continued through that. So we do have that balanced type look. It's actually a nice, clean look in my opinion from the overnight session. And that first 30 did confirm the potential for this bull trend. So the TPO was at first looking trendy. Now it's kind of a normal variation. What you can see is when that trend becomes consolidation before it resumes. So be watching that volume profile today to look for that migration and balance. And I will keep everybody updated on Twitter when that happens. We did not erase that open test drive. So I was watching super closely on this pullback to see if we did make a new low in the day, which we did not. So as it stands now, it's just a standard pullback, and we'll see if that holds and if we do get that resumption of the trend setup. So embarrassingly flat for now, but I think there is hope, and we will go from there. These expected move numbers and such you can also find in this document, and these are my major levels for today, which just simply correspond to my barb strategy. These 6 levels are going to match this every day. So if you want to keep tabs on barb, that is the future strategy. You can go to this tab down here. You can see what's going on. We actually had our worst drawdown ever yesterday. So obviously it only started in January. One second, I gotta add here. Okay, so it started in January, and yesterday was the worst drawdown. So intraday, it got as low as almost 7,500, and that was a drawdown of about 8,500 from the high. Yet still looking real nice. And these numbers need to clean up a little bit because I didn't break the trades down earlier in the year, so this is going to be a little bit skewed. But what I've also put on here is what I use to kind of track the expectancy and quality of a strategy. It's called the results-based assumption forecast. This is just stolen from a Redditor who stole it from Mark Minervini. I think his first name's Mark. I'm sure a lot of you have heard of him. Famous trader. And this is kind of how he keeps tabs on his metrics. So this right now says that it's about 265 trades to double the $50,000 account. That is not accurate. So what I'm looking at, and I did add another column here, is I'm thinking it's going to be like Cinco de Mayo. About Cinco de Mayo is when we're going to hit that double. Just because what I did is I took out all of January to February. Just because again it's not broken down, and I also played with taking out just some of the high numbers and some of the low numbers, and then I took out yesterday. And I played with various combinations, and it came out to be about 40 trading sessions from now, so 38 was the exact number. So I just pushed that up to Cinco de Mayo. So that's what's going on there. You can use this yourself if you just Google. Let me go back to here. If you just Google results-based assumption forecast RBAF, you will see a Reddit link where you can just copy that and use it for whatever strategy that you like. I'm a huge fan, and I've been using it for years, and I find that it helps with the drawdowns. Days like yesterday are super painful, but as long as everything stays on track, you can keep from tilting, as they say. So that's what we're looking at in Barb, and I just wanted to plug that real quick as I continue developing this with the help of my friend OJ, who's making me a nice Excel document to enable slicing of this data. So over time, so I've changed some of these columns as well. Over time, I want to kind of filter by what the inventory looks like, what the TPO looks like, what that IBR looks like, day of the week, as many different variables as make sense to figure out what are the optimal times to trade, optimal times not to trade. Because right now, Barb is running anytime that so from 9:50 until 1600 every day, and as a trader, one's time is super important. So I think over time, it's going to be helpful to kind of pick out when are the best times to trade. Maybe not necessarily maximizing profit, but there's definitely a lot to say about maximizing one's use of time. So uh, quick little digression there into Barb. Again, one more time, in the description of this video is where you find the sheet. So moving on to some price action stuff, we're going to just hop right in to look at the daily chart as price goes near this morning's high, which is super important. So this is an ES chart, yet if you have your charting platform open, I encourage you to check it out on SPY. So if you look at what happened this morning on SPYs, we got rejected right at that downtrend line from the October 13th low. So if we make a higher high in the day, there's, in my opinion, a high potential to break out, just because we're then again popping above that line. We're defending. What you can see here is the daily VWAP, and again we'll be above that 50 SMA. So it's really, I think, significant breakout fuel if we make a higher high and then build maybe a little time and volume. And again, we're looking for that migration of balance. So I'm watching this POC in particular, and if value starts to move up, that POC starts to move up, that's going to be our first sign that normal variation is being confirmed and potentially breaking out higher and going to explore some of the space here that we lost earlier in the week. And besides that, on the macro chart, I think that's actually good. So that's what I'm looking at in the macro chart. You can see this is kind of where I think the major supply begins again, right near that 40-40 to 40-50 area from where we started selling off with good old Jerome on Tuesday. So moving on to the TPO chart, I'm going to switch screens here again. Watching for 15. 15 is going to be another ad. So on the TPO chart, you can see poor lows. Poor lows are simply weak-handed shorts. So as price kind of nears that poor low, you often see a bit of those shorts covering. So they're weak-handed shorts. They probably want to cover for a small loss or a scratch, and that's kind of what you saw here so far this morning. Is actually a perfect example. We didn't quite even get back to that low. We did not unravel the open test drive, and you're seeing price make a move higher once again. So that's what I'm watching, those poor lows there. I'm watching the single, especially if we do see an unwind of that open test drive. I'm going to watch what happens at that single. And then finally, obviously, as we go to the poor low from the overnight session, watch for a potential bounce there. So I think for the easiest trading, we don't really want to get involved on the downside. I mean, if you're a bear, obviously you always want to get involved on the downside. Yet for the trend look, I think we want to keep going up. Barb would really appreciate that today after yesterday, and so we'll see what happens there. But those are the levels I'm looking at, so you can just correlate that to the low from the IB, the low from, I believe that is the overnight low, so the overnight low itself is a poor low, and then as we start to move lower, watch that single, maybe a false break below yesterday's low for a bounce there. And then finally, if they do give us a full reversal, my first major level is at 50 to 55 zone down there. And hey, if we want to be super optimistic on the bear side, 39.25 would be that lower target once I get through there. So that's what I'm looking at on TPO and TPO land. You can see today that we did pop above this B-shaped distribution. So remember that a B-shaped distribution is usually indicative of longs starting to exit the market, especially when it's a multi-day distribution like this. Those are often pretty reliable. You can see today we're above the lowercase b, the ovally part of that distribution, and to me again that's just adding to the long fuel if we get back above that trend line. Everyone's looking at the trend line, so often we chop around them, yet once you make that breakout look, everyone's piling in, shorts are covering, and that's kind of what leads to those squeeze type looks, or whatever the opposite of a squeeze is, breakdown type looks. So that is all on TPO. And just one more chart, we're going to look at volatility. Watching 15 here. So volatility is kind of stuck between 19 and 20. Yeah, I mean, there's not much fear in the market right now. So I was checking out one of my newsletters. I look at two newsletters every morning. One is Adam Mancini's Trade Companion, and the other is Tier One Alpha, which for some of you Gex and Gamma fellows, you might like that. So I didn't even realize this, but yesterday there was actually some geopolitical tensions. I think the most important of which was a report coming out about Putin and nuclear weapons. Um, it obviously couldn't have been too significant given what happened with the market. There's no reaction to volatility, yet I still think that it's interesting that you're just not seeing that fear come back in yet. And yeah, I just wanted to bring that up just because you're seeing that the VIX is still hanging out below that 20 level on the futures and below, I think, 19 now. Yeah, even below 19 on the VIX itself. So, uh, again, lending to the bull case. Since we're above those major trend lines, which you saw on that macro chart, I'll show you real quick again. We're above those major trend lines from the bottom of the macro chart. Once we pop back above on the SPY chart, stand by here. I'm watching closely for an ad. Um, then it's just kind of confirming that bullish look. VIX below 20. You remember early in 2022 and really through 2022, each time that the VIX got below 20, it would bounce and you see the resumption of the downtrend. Now you're kind of seeing the opposite. We're kind of getting rejected at 20 and you're seeing the price action confirm that bullish look. So for me, I'm still assuming that that bear market was cyclical in 2022 and that we're going to chop sideways or higher. I bring that up every briefing because I think it's the most important thing to keep in mind for just kind of the overall outlook. Be you a day trader or a swing trader, we're not trying to have crystal balls. We're not trying to pick a side. Yet it helps us make sense of everything that's going on. So, getting an ad here. Got one more ad coming up, so this is actually becoming a big position. Hopefully they don't do what they did yesterday and impoverish me with uh, significant rejection. So besides that, I will be moving this live stream that you're seeing here to Twitch. And then if you are an electronic music fan who doesn't mind those rough routine trader transitions, you can hear a set from 12 to 2 Eastern uh, on there as well. So as always, please feel free to tweet me at routine trader on Twitter, the only place where you tweet. I will keep everybody updated as the day goes on. I think it's a little more complex look. I think I had one tweet yesterday because it was just chop all day, and we saw that in the morning. So as today develops, as balance shifts, I'll keep anybody who cares posted on there. And if you're a subscriber to the newsletter, you can also respond to any of the newsletters, and I will get that in my inbox. So I'll be happy to respond back to you. If you're not a subscriber, well, you can go into the lovely description of this video or simply go to retailtrading.com to get involved in the newsletter summary that gets sent out at 11 every day. And then obviously you can put any comments, questions, concerns, trolls, whatever floats your boat, hair product recommendations, because we still got that going on, comment section of this video itself. So links to everything are in the description. I've said that like 14 times, so why not make it 15? Finally, if you did enjoy today's content, please give the video a like to help with YouTube's algorithm. I would really appreciate that. And yeah, besides that, it's time to trade. We'll see how this progresses. It's becoming quite a significant position, especially when I get the additional ad at 15. So uh, we'll see if we keep trending and if we get some of the money back, or hey, why not all of the money back from yesterday? So we will go from there. And yeah, that's all I have for you. So thank you for tuning in. And oh, well, look at this. We have a new person in the chat. I don't know who you are, DK, but hello to you as well. And thank you for tuning in. I hope that you found today's video valuable if you got any of it. And yeah, if you want to stay posted on the channel, you can check it out. I really appreciate the subscription. Otherwise, you have a great day. OJ, I see you in the chat. I don't know if you're still here, but you have a great day as well. And everybody else watching, stay classy until tomorrow.